Hello and good morning, everybody. You're with Martin Panev, Chief Account Executive, Trading Analyst, GDMFX. Welcome to today's European Session Market Outlooks. Starting with the U.S. markets, as usual, the industrial average, the Dow Jones, yesterday did no movement basically. The Nasdaq, though, dropped 18 points. The Dixie Index is unchanged. Retail sales month on month and excluding autos month on month, 0.1% better than expected, and 0.1 worse than expected. Initial and continuous jobless claims, 4,000 worse than expected, and 26,000 worse than expected. Capacity utilization, industrial production month on month, and producer price index month on month and year on year are the events in the agenda today. European markets, the DAX 30 tried to push higher, but ended on a negative 120 points. The French CAC 40 same with 22 points down yesterday. French inflation reports came slightly worse than expected. The Swiss producer price index came worse than expected as well. In the morning, we already told you German inflation data as expected, and the Spanish is showing slight improvement. The Greek domestic product, the gross domestic product reading came better than expected and better than the previous. Today, the preliminary GDP data for Germany and France year-on-year came close to the anticipations, with a slight decline on the quarterly reports. Italian and Portuguese GDP data is due any moment, along with the European zone in general year-on-year and quarter-on-quarter reports. GDP for France, Germany, Italy, European zone, as well as the inflation report for the European zone are due to come any moment. Greece yesterday agreed to the third bailout program and had to be put on vote at early morning today in the parliament. Some of the members of the leading party, the Syriza, have announced yesterday that their vote will be against it. UK markets, the FTSE 100 moved down with about 23 points, closed at 6,555. Predictions about the timing of the interest rate hike continues as the employment data was weaker than expected. This left the MPC with little reason to react sooner than according to the latest predictions, August 2016. Before the weak labor data, the predictions were for March or April 2016. Even after the first hike, the market expects that interest rate will grow slowly and will probably reach 1.5% at the end of 2017. Inflation reports are due mid-next week on Tuesday. Asian markets, the Nikkei 225, 372 points range, 160 up, open today with a bearish gap of 60 points. The Chinese yuan halted a 3-day slide after China's central bank raised its reference rate for the first time since Tuesday's devaluation and said it will intervene to prevent excessive swings. Policymakers are trying to balance the need for financial stability against a desire for stronger exports and the yuan's inclusion in the IMF's basket of reserve currencies. Japan, restoring its nuclear reactor fleet, will keep pressure on the depressed liquefied natural gas prices for the years as the nation's electricity utilities, the biggest buyers of the fuel, reduces the purchases. Japan turned to LNG for gas-fired power plants as safety concerns forced the shutdown of all of the country's reactors after the March 2011 Fukushima nuclear disaster. Running reactors would also dent demand for other fossil fuels. If the reactors restarted this year, it would cut fuel oil demand by 80,000 barrels to 100,000 barrels a day, according to Citigroup Incorporated analysts. Shipments of oil and iron ore were disrupted yesterday at northern Chinese seaport of Tianjin after a blast killed at least 44 people and injured hundreds. This weekend on Sunday, we have the Japanese GDP deflator year-on-year and second quarter, and the analyzed data. So bear in mind Asian traders for Monday opening gaps. JPY export imports and merchandise trade balances due next week. Also interest rate decision on Thursday, and on Friday for China we're looking for the foreign direct investment readings. On the Pacific front, yesterday we had a couple of events. Retail sales quarter on quarter 0.1% down from 0.5 and from previous 2.7, a very serious decline there. Retail sales excluding auto quarter on quarter 0.1 down from previous 2.9. In Australia, the Reserve Bank Assistant Governor Christopher Kent signaled the worst is probably over for the nation's job market, suggesting a 3-month pause in interest rate could be extended. Developments suggest that there will be slightly less spare capacity in the labor market than earlier anticipated. He reiterated that unemployment was likely to be little changed over the next 18 months. He also said that the RBA board will continue to keep an open mind on interest rates. There's a slightly positive story to the recent data, but the economy is still growing at a moderate pace. The unemployment rate is still very high, though. This is what Mr. Kent said. In his speech, the central bank's chief forecaster identified 4 factors that allowed for stronger employment growth, even as the economy's expansion remains below its potential rate. Those would be the lower immigration, a weak wages growth, and stronger hiring in more labor-intensive industries. Basically, this is the most important things which came out yesterday for the Asian Pacific region. The last thing we need to cover is the commodity sector, starting with the S&P 500 index, which had a range of 20 points yesterday, currently at 2,080. The natural gas storage change came yesterday in the US. In the weekend at August 7 rose by 75 billion British thermal units, above expectations for an increase of 55, and following a build of 32 billion in the preceding week. Natural gas is trading at $2.80 at the moment. The range yesterday was 14 cents. Moving down to the crude futures, which fell to fresh 6-year low on Thursday amid a stronger dollar, as energy traders continue to unload long positions upon concerns of glut for oversupply in the global markets. While the U.S. crude stockpiles fell for a second consecutive week on Wednesday, traders preferred to focus more intently on long-term forecasts for dwindling production. The WTI had $4 range yesterday, currently almost at $22 per barrel. Overnight, gold futures erased some of their gains from Wednesday's surge as investors locked into profits earned in the prior session. Gold prices dipped mildly in Asia this morning as investors looked for shifts in outlook for Asian economies after China's surprise evaluations this week. Gold had a range of $13 yesterday, currently at $1,114 per troy ounce. Silver had a range of almost 30 cents yesterday, currently at $15.40 per troy ounce. That's pretty much all from me from today. I wish you a successful trading day. Cheers. Bye-bye.